Let's start with our first article here from our friends at Better Dwelling, entitled Canadian Real Estate Prices Back to 2017 Levels After Inflation. According to BMO, Canadian real estate prices have stayed relatively flat, but inflation has eroded their real value. BMO Capital Markets warns inflation-adjusted prices are back to 2017 levels. Weak sales may reflect generational hesitance rather than affordability concerns.
Wow, 2017, I mean, basically a decade ago. Look, a lot of that erosion comes from the weakening dollar, right? The Canadian dollar has been one of the weakest G10 currencies in the year of 2025, pressured, of course, by things like structural weakness, including low productivity in this country, high debt loads, and a kind of fragile housing market. Analysts warn that these forces will likely keep the loonie under pressure as global currencies strengthen. Right now, one Canadian loonie is equal to about 72 US cents.
And anyone looking to buy their first home will tell you that prices are going down, but not nearly enough for them maybe to restore affordability that they'd want, right? So home prices dropped 21% from their peak in 2022, but they're still much higher than before the pandemic in 2020. After that initial drop, prices haven't fallen much more. And according to Korea's latest numbers, which we cover every month on the show, the average home in Canada costs just 4% less. So prices have fallen about 4%. Year over year, which is a small savings. Doesn't really help buyers a ton when rates are actually a little bit higher than they were this time last year.
Now, senior BMO economist Robert Kavsik, who's a friend of the show and been a guest as well, I'm going to quote him here. He says, Canadian home prices continue to drift lower as the market reverts back to income, interest rate, and cash flow fundamentals. So he further noted that prices have only fallen 1.4% annualized over the past 3 years, almost a year after the downturn began. Now, despite home prices stalling after that correction, there's been progress. The bank explains that home prices are still up a modest 2.2% annualized over the 5 years when the correction started.
And so home prices in Canada look stable on paper, but they're actually losing value when you factor in inflation. So home prices may seem positive, but inflation has been running at 3.7% per year during that period of time on average. And this means that the real value of homes has been dropping, says Kapchik. So high inflation makes borrowing more expensive, but it also means your money doesn't go as far because home prices have barely moved while inflation has climbed and homes are worth less in real terms. So when you account for inflation, home prices are basically the same as they were 9 years ago, he says.
Now, despite the erosion in real time, home sales still remain weak. The bank suggests this has less to do with affordability and more to do with buyer hesitation. Okay, that's called sentiment, which is, of course, the real silent controller of the economy. A generation is now realizing that the real estate can be a massive wealth creator, but it can also lock in capital and drain your cash flow for years. That's why new buyers aren't rushing into the market, and investor interest has kind of vanished for the most part. Well, at least that, that early or speculative, investor, quote unquote.
Yeah, for sure. I would agree with his sentiment. But next article from Story says, strong year for housing start, but the finish was uneven. And Canada built more homes in 2025 than in 2024, but construction slowed down by the end of the year. And according to the Canada Mortgage and Housing Corporation, or CMHC, Canada started building about 260,000 homes in 2025, which is about 5.5% more than 2024, making it the fifth best year ever. Cities with 10,000 people or more, builders started about 240,000 of those homes, which is up 6% or more. And most of this growth came from rental construction, which we've been talking about, which had another record-breaking year.
Yeah, I mean, like an overwhelming amount is kind of PBR's purpose-built rentals, which, again, if you've listened to the show for a while, we have been covering that since kind of day one. So for the second year in a row, more than half of those new homes built in Canada in Canadian cities were rental properties, right? Purpose-built rentals. Looking at Canada's 6 biggest cities, new home construction increased by 3.9% in the year of 2025 compared to the previous year in 2024. Calgary and Edmonton had record-breaking numbers, and as someone who is working on dozens of these kind of purpose-built rental projects, I can tell you A lot of my clients are in Calgary and Edmonton. Montreal also jumped 58%, and the capital, Ottawa, and neighboring Gatineau grew by about 12%. However, Toronto dropped 31%, and Vancouver fell 3%. So Toronto, again, usually on the wrong side of most equations when it comes to this kind of stuff.
Yeah, I mean, Toronto and Vancouver, they're both not affordable. So, like, look at the markets where housing is affordable. Like, housing affordability is a wonderful thing, right? It seems to get stuff done, and people will consume housing where it's just demand or price elasticity of demand, right? If prices go down, you will buy more of the thing. And December ended strong. Housing starts rose 11% month over month towards the end of the year on a seasonally adjusted rate, 282,000 units, while actual starts climbed 25% year over year to 20,000 units, which is a December record. And Ontario actually led with the highest monthly total of the year. Toronto, Montreal, and Vancouver all posted year over year gains towards the end of the year, which is a good thing, heading into the next year after coming off of a bad one, right?
Yeah, totally. But look, CMHC of all people warns that the overall picture is maybe a little less positive. When you look at the average over 6 months, which evens out the ups and downs, housing starts barely changed in December. They actually dropped slightly, and very, very slightly, 0.1% to 264,000 units, but they've been going down since September. Now, CMHC's chief economist and friend of the show, Dan, we've had the opportunity to speak with Mathieu Lebarge many, many times, and he's actually been on the show as well. Great guy, very sharp. He said that the most of the growth in 2025 happened early on in the year, in the first couple quarters. Economic uncertainty and the high cost of building, of course, materials and labor of such large apartment towers have pushed builders to focus on smaller projects instead. Because of this, housing construction is starting in 2026 at a bit of a weaker spot than many had hoped. CMHC points to slowing construction activity and ongoing concerns about global politics, trade issues, tariffs, you name it, all the stuff that everyone's concerned and talking about. A new housing market outlook report will be coming out this February. And Dan, you better believe it, we are obviously going to be covering that. That is going to help show what actually happened in that slowdown at the end of 2025, and hopefully it's just temporary, or is it a sign of what's to come for the Canadian housing supply in 2026 and beyond?